On February 3, 2025, President Donald Trump announced a significant economic initiative by signing an executive order to establish a U.S. sovereign wealth fund. This fund, similar to those operated by countries with stronger fiscal positions, is intended to generate wealth for the American populace and potentially facilitate the acquisition of TikTok, a widely used social media platform facing legislative challenges. Executive Order and Objectives. During a press conference held in the Oval Office, President Trump articulated his vision for the Sovereign Wealth Fund. He emphasized its role in monetizing U.S. assets and directed the Treasury and Commerce Departments to devise a comprehensive plan within 90 days. Treasury Secretary Scott Bessent underscored that the fund would effectively utilize the nation's balance sheet for the benefit of Americans. The overarching goal is to create a robust investment vehicle that could rival existing sovereign wealth funds globally, such as Norway's government pension fund valued at $1.7 trillion. Financial viability and concerns. The announcement was met with skepticism regarding the financial feasibility of such a fund, particularly in light of the United States' ongoing budget deficits. Critics pointed out the challenge of sourcing initial capital for the fund, with some analysts questioning how the government would finance it when it already spends more than it collects in revenue. In response, Trump and Bessent floated various strategies, including acquiring equity stakes in companies with which the government has contracts, such as vaccine manufacturers. This approach reflects a shift towards greater government involvement in the economy, moving away from the traditional free trade principles that have long governed U.S. economic policy. International context. The establishment of a sovereign wealth fund in the U.S. is notable when compared to similar funds in other nations. For instance, countries like Norway and Saudi Arabia have successfully deployed such funds to invest surplus revenues from resources like oil. Trump's ambition is for the U.S. fund to grow into one of the largest sovereign wealth funds worldwide, potentially allowing it to make substantial investments in both domestic and international markets. Implementation timeline and legislative considerations. The administration plans to roll out the fund within a year, although the timeline hinges on whether new legislation is required to facilitate its creation. The executive order mandates the evaluation of governance structures and transparency measures to prevent mismanagement and ensure that investments serve the public interest rather than political allies. Differences in media coverage. Various news outlets reported on Trump's announcement, each highlighting different aspects of the initiative. Al Jazeera focused on the potential implications of the fund for purchasing TikTok but did not delve deeply into the financial challenges it may pose. In contrast, the New York Times provided a thorough analysis of the historical context of U.S. fiscal policy and the economic implications of increased government intervention. Meanwhile, CBS News offered a more straightforward account of the executive order, emphasizing the operational plans for the fund and its expected outcomes. Summary of events. February 3, 2025, Trump signs the executive order to create the Sovereign Wealth Fund, indicating potential plans to include TikTok. Next 90 days, Treasury and Commerce Departments are tasked with developing a detailed operational plan. Within 12 months, the administration aims to have the fund operational pending legislative requirements. In conclusion, the establishment of a U.S. sovereign wealth fund marks a bold move in American economic policy. While it presents opportunities for generating wealth and investing in strategic industries, it also raises pressing questions about financial sustainability, governance, and the long-term implications for the U.S. economy amidst existing budgetary constraints. Counterintuitive information regarding the establishment of a U.S. sovereign wealth fund under Trump includes 1. Financial viability versus persistent budget deficits. It is counterintuitive that a sovereign wealth fund, which is typically funded by budget surpluses, is being proposed in a country that has persistent and growing budget deficits. While Trump and his administration outline plans to monetize U.S. assets and potentially take equity stakes in companies, the fundamental challenge remains how to finance such a fund when the U.S. government is already spending more than it collects in taxes. 2. Shift from free trade to government intervention. The U.S. has historically embraced free trade in open markets. The establishment of a sovereign wealth fund represents a significant shift towards increased government intervention in the economy, a move that seems paradoxical given the traditional Republican emphasis on limited government and free market capitalism. This shift is especially notable as both Trump and Biden administrations have taken more proactive roles in supporting American companies at the expense of foreign competitors. 3. Comparison to other nations' models. While the U.S. aims to create a sovereign wealth fund akin to those in countries like Norway and Saudi Arabia, those countries benefit from substantial budget surpluses derived from natural resources or other significant revenues. In contrast, the U.S. operates under a different economic reality, making the goal of creating one of the largest sovereign wealth funds in the world ambitious and perhaps unrealistic given its fiscal situation. 4. Use of sovereign wealth fund for TikTok acquisition. The idea of using a sovereign wealth fund to finance a purchase like TikTok is counterintuitive. Sovereign wealth funds are generally aimed at long-term wealth generation for a nation, while the acquisition of a single company, particularly one embroiled in political and regulatory challenges, may not align with the typical goals of such funds. This strategy raises questions about the fund's primary purpose and whether it can remain focused on broad economic benefits rather than being used for specific political agendas. 5. Concerns about governance and transparency. Despite the intention to create a fund that benefits the American people, there are significant concerns regarding governance and transparency. The potential for political mismanagement and favoritism in investment decisions counters the typical expectation that sovereign wealth funds operate with strict oversight and accountability, particularly in nations known for strong institutional frameworks. These points highlight the complexities and contradictions inherent in Trump's proposal for a U.S. sovereign wealth fund, raising questions about its feasibility, purpose, and alignment with traditional economic principles. The establishment of a U.S. sovereign wealth fund, as ordered by President Donald Trump, represents a significant shift in the nation's economic policy and governance. While many may focus on the immediate implications of the fund's creation, such as its potential to purchase TikTok or its role in generating wealth for Americans, there are deeper and often overlooked aspects that warrant attention. 1. Budget deficits and financial viability. One crucial point that appears to be understated in mainstream discussions is the financial viability of creating a sovereign wealth fund in the context of the U.S.'s ongoing budget deficits. The U.S. has a long-standing history of budget deficits, which raises questions about how the fund will be capitalized. Trump and Treasury Secretary Scott Bessent suggested that the government might acquire equity stakes in companies it does business with, such as vaccine manufacturers. However, this approach could raise ethical concerns regarding conflicts of interest and the appropriate use of taxpayer dollars. The significance of this issue lies not only in the immediate financial implications but also in its long-term sustainability. The potential for mismanagement or politically motivated investments could jeopardize public trust in government institutions. Thus, the economic rationale for the fund as well as its operational integrity deserves rigorous scrutiny. 2. Governance and transparency concerns. Another critical element that may be overlooked is the governance structure of the proposed fund. Questions surrounding accountability, oversight, and transparency are paramount, especially given the history of federal investments being mishandled or directed toward political allies. The absence of a clear governance framework could lead to perceptions of impropriety or favoritism, undermining the fund's legitimacy. Moreover, the potential for the fund to be used as a political tool rather than a means of generating wealth for the American people raises significant ethical concerns. Ensuring that the fund operates under strict guidelines to prevent conflicts of interest and to maintain public accountability is essential for its credibility and effectiveness. 3. Economic protectionism versus free trade. Trump's initiative comes against a backdrop of shifting economic policies that lean toward protectionism. The move towards establishing a sovereign wealth fund signifies a departure from long-standing principles of free trade and open investment as highlighted by various sources. This shift reflects broader trends in U.S. economic policy, where government intervention is increasingly favored over market-driven solutions. The implications of this shift extend beyond the creation of a sovereign wealth fund. It could signal a more profound transformation in how the U.S. engages with global markets and foreign investment. The potential for retaliatory measures from other nations concerned about U.S. protectionist policies could lead to a ripple effect impacting international trade relationships and economic stability. 4. Comparison with international models. While comparisons with successful sovereign wealth funds in countries like Norway, Saudi Arabia, and Singapore are often made, the U.S. context is markedly different. These countries have established significant wealth reserves, often derived from natural resources or trade surpluses, which allow for substantial investments without immediate financial strain. The U.S., on the other hand, operates under a different fiscal reality, characterized by persistent deficits and national debt. The aspiration for the U.S. fund to rival the largest funds globally, such as Norway's $1.7 trillion fund, is ambitious but raises questions about the feasibility of achieving such scale without a robust financial foundation. This comparison highlights the need for a more nuanced understanding of what constitutes a successful sovereign wealth fund and the contextual factors that influence its operation. 5. Public perception and political ramifications. Public perception of the fund's creation could significantly influence its acceptance and success. The framing of the fund as a means to generate wealth for Americans must be carefully managed to avoid skepticism about its true intentions. The association with purchasing TikTok, a contentious issue in itself, could lead to negative public sentiment if not handled transparently. Furthermore, the political ramifications of this initiative are complex. The establishment of a sovereign wealth fund could be seen as an expansion of government power, leading to resistance from fiscal conservatives and libertarians who advocate for free market principles. Balancing these political dynamics will be crucial for the administration to ensure the fund's long-term viability and public support. Conclusion. The establishment of a U.S. sovereign wealth fund is a multifaceted issue that extends beyond its immediate financial objectives. The implications of budget deficits, governance, economic policy shifts, international comparisons, and public perception are all critical components that deserve careful consideration. Overlooking these aspects could lead to significant challenges that undermine the fund's intended purpose and the broader economic landscape of the United States. Addressing these concerns proactively will be essential for the successful implementation and operation of the fund, ensuring it serves the interests of the American people without compromising ethical standards or fiscal responsibility. 1. Executive Order and immediate implications. President Trump's signing of the executive order to establish a U.S. sovereign wealth fund marks a significant shift in U.S. economic policy, indicating a move towards government-initiated investment strategies typically associated with countries enjoying budget surpluses. The order delegates responsibility to the Treasury and Commerce Departments to develop a detailed plan within 90 days. The fund's creation is framed as a mechanism for generating wealth for Americans and potentially financing high-profile acquisitions, such as TikTok. This initiative illustrates a departure from traditional fiscal management and raises questions about the long-term viability of such a fund given the U.S.'s persistent budget deficits. 2. Financial viability and budget concerns. The proposal for a sovereign wealth fund is met with skepticism regarding its financial sustainability. With ongoing budget deficits, critics question how the fund will be financed. The administration suggests leveraging U.S. government contracts to acquire equity stakes in private companies such as vaccine manufacturers to provide a financial foundation. This indicates a strategic pivot towards greater government involvement in the economy, challenging long-held beliefs about free market operations. The viability of this model, especially in a nation traditionally wary of expansive government economic roles. is a critical point for analysis. 3. International comparisons and aspirations. Trump's ambition for the U.S. sovereign wealth fund to rival established funds like Norway's and Saudi Arabia's highlights a desire to reposition the U.S. in the global economic landscape. These funds are often instruments for stabilizing national economies and ensuring strategic investments. The comparison raises important discussions about the effectiveness and maturity of U.S. fiscal policies in contrast to nations with successful sovereign wealth funds, as well as the potential benefits and pitfalls of such an approach in the context of American economic principles. 4. Governance transparency and legislative challenges. The establishment of the Sovereign Wealth Fund brings to the forefront critical concerns regarding governance transparency and potential political influences on investment decisions. There are questions about the need for new legislation to facilitate the fund's creation and operation, which could lead to political debates and legislative hurdles. Ensuring that the fund operates with integrity, avoiding mismanagement or the appearance of favoritism, will be vital for public trust and the fund's long-term success. This aspect underscores the need for robust regulatory frameworks and accountability measures, particularly in a politically charged environment. These points encapsulate the complexities and implications of Trump's initiative to create a sovereign wealth fund, providing a foundation for deeper discussions about fiscal policy, economic strategy, and governance in the U.S. 1. Norway's Government Pension Fund Global GPFG. Established in 1990, the GPFG is one of the largest sovereign wealth funds in the world with assets exceeding $1.7 trillion. It was created to manage the revenue generated from Norway's oil and gas sector, ensuring that the wealth from natural resources benefits future generations. The fund operates under strict ethical guidelines, focusing on sustainable investments and transparency. The Norwegian government is limited in its annual spending from the fund, which is designed to maintain its value over time and support the national budget. The GPFG exemplifies how a country can effectively utilize sovereign wealth to stabilize its economy and fund public services while also adhering to principles of responsible investment. 2. Abu Dhabi Investment Authority (ADIA). Founded in 1976, ADIA is another prominent sovereign wealth fund with estimated assets surpassing $700 billion. It was created to invest the surplus oil revenues of the Emirate of Abu Dhabi, aiming to generate long-term returns for the benefit of the citizens of the UAE. ADIA invests in a diverse range of asset classes, including equities, fixed income, real estate, and private equity, across various geographies. The fund exemplifies how resource-rich nations can manage their wealth prudently and diversify their economies by making strategic investments globally. ADIA has been a significant player in international markets and is known for its rigorous investment strategies and governance practices. 3. Singapore's Government Investment Corporation (GIC). Established in 1981, GIC manages Singapore's foreign reserves and is tasked with achieving good long-term returns on investments. With assets estimated at over $600 billion, GIC focuses on a diversified portfolio that includes public equities, fixed income, real estate, and alternative investments. The fund was created to secure Singapore's financial future and provide a buffer against economic volatility. GIC operates with a strong emphasis on transparency and accountability, and it plays a crucial role in supporting Singapore's economic stability and growth. The success of GIC underscores the importance of effective governance in managing sovereign wealth for national benefit. The establishment of a U.S. sovereign wealth fund, as initiated by President Donald Trump on February 3, 2025, marks a significant shift in U.S. economic policy. This initiative will likely have profound implications for the future of the U.S. economy, investment strategies, and international relations. Here are several predictions regarding its trajectory and impact. 1. Financial viability and funding sources. In the short term, the funding of the Sovereign Wealth Fund will be a major concern. Given the U.S.'s ongoing budget deficits, the government will need to explore innovative financing solutions. Potential strategies could include Equity stakes in government contracts. The fund could acquire equity stakes in companies that provide services or products to the government, such as vaccine manufacturers. This could generate returns that would help finance the fund. Tariff revenue. The possibility of using revenue generated from newly imposed tariffs to seed the fund may gain traction. This aligns with Trump's protectionist trade policies aimed at supporting American industries. Public-private partnerships. Engaging wealthy investors in joint ventures could attract additional capital, allowing the fund to grow rapidly. 2. Investment strategy and focus. The sovereign wealth fund may prioritize investments in strategic sectors that align with national interests. Technology and cybersecurity. With the potential acquisition of TikTok and similar platforms, the fund could focus on tech investments that enhance national security and promote American innovation. Infrastructure. Investments could also target infrastructure projects aligning with broader government initiatives to modernize U.S. infrastructure and create jobs. Sustainable energy. Given the global shift towards sustainability, the fund may invest heavily in renewable energy projects. Positioning the U.S. as a leader in the green economy. 3. Governance and transparency. The governance structure of the fund will be critical to its success. Concerns about transparency and potential favoritism in investment decisions will necessitate clear regulatory framework. Establishing a robust legal and regulatory framework to govern the fund will be essential. This might include independent oversight committees to ensure accountability. Public reporting. Regular public disclosures regarding investments and returns will be necessary to maintain public trust and mitigate concerns about misuse of funds for political gain. 4. Impact on U.S. economic policy. The creation of a sovereign wealth fund signifies a broader shift towards increased government intervention in the economy. And of free trade ideals, the fund may reinforce a more protectionist economic stance, prioritizing domestic over foreign investments. This could lead to strained international trade relationships. New precedents for federal involvement. This initiative could set a precedent for future administrations to establish similar funds, leading to a more interventionist federal economic policy. 5. International relations and competitive dynamics. The establishment of a U.S. sovereign wealth fund will influence international relations, particularly with countries that already have established funds. Geopolitical tensions. The U.S. might use the fund as a tool to counter the influence of nations like China, especially in technology sectors. This could heighten geopolitical tensions and lead to competitive dynamics resembling a new Cold War. Collaborations and alliances. Conversely, the fund could foster collaborations with allied nations for joint investments in global initiatives, such as climate change and technological advancements. 6. Long-term sustainability and economic growth. The long-term sustainability of the fund will depend on its ability to generate consistent returns and adapt to changing economic conditions. Market volatility. The fund must navigate market fluctuations and geopolitical events that could impact investment returns. A diversified investment strategy will be essential to mitigate risks. Economic growth. If effectively managed, the fund could contribute to long-term economic growth by funding infrastructure projects and technological advancements, ultimately benefiting the American public. 7. Public perception and political implications. Public perception of the fund will play a crucial role in its future. Support and skepticism. While some may view the fund as a positive step towards economic empowerment, others may be skeptical about its management and potential for political misuse. Public engagement and education will be vital. Political ramifications. The success or failure of the fund could have significant political implications for Trump and future administrations, influencing electoral outcomes and policy directions. Conclusion. The establishment of a U.S. sovereign wealth fund represents a bold and potentially transformative economic strategy. Its success will hinge on effective governance, innovative funding strategies, and the ability to navigate complex domestic and international landscapes. If executed well, it could enhance the economic well-being of Americans and position the U.S. as a formidable player in the global economic arena. However, challenges related to financing, transparency, and political considerations will need to be addressed proactively to realize the fund's full potential.